Welcome back, everybody. Kevin McCormick here, and I know it's been way too long since I've done a video for everybody out there, but I wanted to get a video out today because I think we are set up for a great opportunity for the stock market to rally into the next couple weeks and throughout the month of April, in part because of the Trump tariffs and the news that's gone on and the decline we just had, and also great technical setup that we'll get into here in a minute. But for everybody out there, if you're not following me on X, also known as Twitter, please follow me over there. I'm not doing the individual videos as much as I used to, but I am giving out information on what I see in the market on X every week. So if you want to get more up-to-the-minute information about what I see in the markets, go catch me over there. Now let's jump into why I think we're set up for a rally ahead of the April 2nd announcement about reciprocal tariffs from President Trump. We'll jump into the charts in a minute, but first I just want to highlight to everybody out there that there's a lot of volatility and angst and concern about the upcoming announcement. But in reality, Trump has already been fighting with our top trading partners, Canada, Mexico, and China, for the last 3 weeks. The announcements coming on April 2nd have a much lower impact on the U.S. economy and the direction things are going. So you have a lot of volatility and worry out there in the market about what I think we're going to quickly find out to be is a limited to no news issue, which when that relief occurs, we're going to see a rally in the market. Now, let's jump into technicals and why I think we're set up from a technical perspective to rally right here, right now, and why the bottom is in. I'm going to cover a lot of technical stuff today, but I'm going to start off by taking a look at the put-call ratio here on the symbolic platform. The thing to keep in mind here is the put-call ratio is a measure of puts versus calls. And what we see here is when we get a put-call ratio above 0.8, pushing towards 1, it usually indicates a bottom. There's multiple reasons for this, but the ones I'm going to highlight here is people start reaching for puts when the decline has already happened. And once enough puts are sold, it actually helps form a bottom because enough of the big money managers out there have hedged their portfolio and they're not going to keep selling into the decline. So it naturally causes a floor in the market. And you can see here that we hit 0.8 back here on March 14th, March 20th, and the 14th, and the market has been forming a bottom. In the past, you see this happen before too. We had it here at the tops in the market, but back here, bottom, boom, over at 0.8. Here, 0.8 over 0.8. 0.8. Last year, we had a lot of things going on in the market that helped drive it higher, but you can see this has been a decent indicator to help highlight when we're coming to an end. Next, I want to highlight what is really could be considered a counter trend measure in the market. And if you follow me on X, you saw me post about this over the last couple of weeks, and I was looking for this indicator to hit. This is the percentage of stocks with a DeMark buy setup in progress. Let me explain why this is important because it's counterintuitive. The buy setup is a 9 count to let us know when we believe a stock or indice may have hit a short-term bottom. But why I like this indicator, and it's been so accurate when it hits this level, is in order to start a buy count, a stock has to close lower than it did 4 bars prior. So my level of indication for forming a bottom is when over 85% of the stocks in the NASDAQ and S&P 500 have a buy setup in place. This means that 85% of the stocks in the market are trading lower than they did 4 days prior. I think this is a much better indicator than we had 90% of the stocks down today. This is an indicator of multiple down days in a row, and it's broad-based across the entire market. And as you're going to see here in this chart, it does a great job of indicating when we've hit exhaustion bottoms. And we hit this back on 3/14 of this year we hit 90% of the stocks. 90% of the stocks were trading lower than they did 4 days prior. Right now, we're bottoming out. Where we've seen this in the past, I put the blue lines on here. Bottom. Here, bottom. We chopped around here, but great indicator here to buy. Here, it was a couple days early, but you can't be too worried about that. Great opportunity. Look for your buy setups. Here, a couple days early, look for your buy setups. There we go. We'll line it a little better there. So buy setup. Same thing back here. Boom. Bottom hits right here. Boom. Bottom. Buy. These were great indicators every time. Same thing is true in the S&P 500. We'll pull that up right now. You'll see here, perfect aligned. We get above 85, current market. We're looking for a bottom. Back here, great buying opportunity. Market takes off. You'll see it again. It's a great indicator that not a lot of people look at for hitting exhaustion bottoms. We get above 85% of the stocks in the S&P 500 that are trading lower than they did 4 days prior, and it indicates a wonderful buying opportunity in the market over and over and over again. This has been a very consistent indicator for showing that we have hit a bottom. It's a selling exhaustion is what this is highlighting. We're talking about over 85% of the stocks trading lower than they were 4 days prior. This is just a massive sell-off in the market. This is where we just saw the put-call ratio. People start grabbing puts because they're just afraid the market is going to keep going down. But when you hit these levels, it usually means a bottom is in place. Now, I want to jump over to TradeStation and look at some of the other indicators I like to take a look at. We're going to start here with the Williams Valuation Indicator. And here you can see just last week, we got into undervalued compared to gold, the US dollar, and bonds. When this has happened in the past, it's been a great buying opportunity as we get undervalued. We rarely get all three of these aligned. We did back here. Good indications of a market bottom has been put in place. Start looking for buy signals. We also have the seasonals working to our advantage right now. The seasonal pattern called for this exact decline. Top back here and February, decline through the month of March with us bottoming out here next week is what the seasonal pattern calls for. This is not an exact indicator. This is giving you where, seasonally speaking, we should go. But right now, the market should start moving up right here, right now. There's also an interesting habit that a lot of people overlook out there that this decline, in my opinion, starts to occur in March because wealthy people who have a lot of taxes they need to pay, where are they going to get the funding to pay those taxes? They're going to start selling stocks. What do they sell? More likely than not, they're winners. And this is what, seasonally speaking, end of February, that time frame, people start getting their taxes from their accountant, and they start selling stocks, and they're not done until the end of March. This year, we had that seasonal pattern, and then we had the Trump tariffs and all the noise coming from the Trump administration helping to push this market down. But seasonally speaking, this is exactly what we expect this time of year. One of the last things I want to highlight here as well is this is an indicator of professional money and how it's moving in the market. And you can see here that they're usually above the blue line. But when they dip and get a hard sell-off like this, it usually indicates a bottom. Great buying opportunity back here. This indicated a bottom here, bottom here, bottom here. You're getting the trend here. And here we are last year. That's just a couple weeks ago. Over these last few weeks, we have had a complete throw up by the big money managers out there. They've delevered. They've gotten out of margin. They sold their winners just to, stop the pain. Well, guess what? Right around that same time, the 14th of March, they felt their pain. They bought all their puts, and now they're putting money back into the market again. And you can see here, we're probably just a week or so away until they move back above the blue again. And when that happens, it's a great indicator that we're about to take off in the market again. The last thing, if you want to go look at my ADX indicator out there, we're about to cross on the weekly indicator on the ADX as well. I have a video up about more information about this, but these folks are great technical indicators and they're all lining up. I never trade off of just one indicator, but right now we're looking at multiple indicators that indicate that the week of March 15th, we formed a bottom in the market and it is now time to start looking for buy signals. If you want to stay up to date on what I'm doing in the market, go follow me on Twitter, and I look forward to talking to you again.